All right, everybody, today is a really important video. We are talking about the most recent stock I bought. It is Brookfield Asset Management. There was just a spinoff. I think the market is completely confused and just hesitant to buy either BAM or BN. So I'm going to talk about these stocks today. I'm going to talk about why I bought, and I'm going to talk about what I think could happen in the future. Okay, if you don't know me, I'm Austin. I share my portfolio very transparently right here on YouTube, all of my trades, all of my transactions, and my performance. Here's how we did today. We're at $117,800. We're up $77 on the day. At the end of the video, I'll go through my entire portfolio and show you all the stocks I own. But first, let's get to Brookfield Asset Management. BAM is the ticker, and the first thing I like to see in a stock that I'm considering buying is that it has a track record of success, right? Past performance is not always an indication of future returns, right? But I like to see credibility. I like to see a strong history of execution. And that's what we have with Brookfield Asset Management. So we can see since 2000 or roughly the last 20 years, BAM is up 1,655%. I think that's total return versus the SPY up 168%. So very, very strong outperformance. Let's talk about what just happened and why I think this is an awesome opportunity. So Brookfield Corporation successfully completes distribution of 25% interest in its asset management business. All right, stick with me here. This is a little bit confusing, but it's important to understand, and I think this is a great investment opportunity for the next 5 or 10 years. Brookfield Corporation, NYSE ticker BN, and Brookfield Asset Management, NYSE ticker BAM, today jointly announced the completion of the public listing and distribution of a 25% interest in the corporation's asset management business. The corporation has changed its name from Brookfield Asset Management to Brookfield Corporation. Okay, so first thing, current ticker BN is the old BAM, and it has changed its name from Brookfield Asset Management to Brookfield Corporation. Okay. The stock I bought today is BAM. The manager takes on the name Brookfield Asset Management and is successfully listed on the New York Stock Exchange. At the open of markets on December 12th, its shares will trade under BAM. Again, that's the one I purchased. Shareholders can now access a leading pure play global asset management business through the manager, BAM. That's the stock I bought, BAM, and that is the pure play global asset management business. Corporation will continue focusing on deploying capital across its operating business, growing its cash flows, and compounding capital over time. So the way they broke this up is when you think about the two now, if you were to own both of them now, you essentially are getting the exact same functionality, the exact same company as if you owned BAM previously. If you want just the asset management portion, which is the higher dividend yielding portion, you would only own BAM. If you want just the business that's focused on deploying capital across operating businesses, growing cash flows, and compounding capital over time, not asset management, you would only own BN right now. Now, if you are a US investor, you need to look into the tax ramifications. I'll do a separate video on this of owning BAM in a taxable account or owning BN in a taxable account. My take on it and my plan, if I own BAM, I want that to be in a retirement account because there's no funky stuff going on with taxes because of the way laws work between the US and Canada. If I want to own one in a traditional, just a brokerage, non-retirement account, that's where BN is going to go because it pays less dividends. First reason, I think this is just totally misunderstood, and we're talking BAM here. So they're both going to pay a dividend. They talked about it. The dividend is 7 cents a share per quarter for BN and 32 cents a share per quarter for BAM. Now, if we do the 32 cent a quarter dividend, if we do 32 times 4 to get the annual dividend, we see that the annual dividend is $1.28. If we look at the share price today, it's $27.14. So if we divide $1.28 by 27.14, we get, and then multiply it by 100, it is currently paying a dividend of 4.72%. If we look at what's reported, the dividend yield is 56 cents, saying it's a 2% dividend. Now, I think there's a lot of people that just either are confused by this. There's managers and institutions that can't own this right now because of the split or something like that. I think people are going to catch on to this, and they're going to realize that this is a stock that pays a 4.7% dividend and intends to grow that dividend for between 15 and 20% per year for the next 5 years. And they talked about that in their investor day. I'll get to that in just a second. So if they grow that dividend at 15 to 20%, they're going to have a dividend that is over $3 a share sometime within the next 5-ish years, right? And if you look at a $3 a share dividend compared to a $27 stock price, that means your yield on cost of the shares that you bought, the price you bought the shares at today, in 5 years, based on that dividend growth and the dividend you're getting paid on the shares you own 5 years from now, you're going to be making like an 8, 10, 11% dividend on the shares that you bought today. That's incredible. So also shout out to Daniel Pronk and Stock Unlock. He's actually the founder of Stock Unlock, or one of the founders, or he's on the team there. He did a video on Brookfield Asset Management that inspired me to dive deeper. I've been watching the company for a while just because of its outperformance over the long term. But anyways, Daniel did a really good video on this, and I like his YouTube channel and his work. I think he does really high quality work. And thanks to another person named Daniel who commented and told me to check out Stock Unlock. All right, let's talk about dividend growth for a second, right? I've talked about dividend growth in videos before. What generally happens is the stocks that grow dividends pretty fast, 15% or higher, tend to pay anywhere between a 0.5% dividend and, on the very, very high side, a 3% dividend, right? You see American Tower, 3% dividend, and they've grown it at about 19% per year over the last 5 years. But for the most part, you get things like MasterCard and Visa that pay like a 0.8% or less than 1% dividend, and they're able to grow it at 15 to 20%. The fact that BAM is going to be pays a 4.7-ish% dividend yield right now and plans to grow at 15 to 20% per year for the next 5 years is pretty remarkable. What the heck am I talking about? Why do I think they're going to grow the dividend this way? And why am I investing in this thing in the first place, other than that past outperformance in the dividend, right? They had their investor day. This was in November, I believe. They talked about inflation. Again, this is before, just the recent reports, but they said inflation is at 40-year highs, and they talked about how that actually plays into the strength of their business model. The tighter financial conditions, which is what we're seeing, inflation control requires sustained restrictive monetary policy. 10-year government bond rates do not reflect increases in term premiers yet. And then equity valuations incorporate changes in discount rates, limited impact of higher inflation, and the slowdown on earnings. So that's what they're saying the financial conditions are. They are saying that all of this stuff, this new macro paradigm, favors operators of high quality renewables, which again, these are the categories of things that their investments are in, infrastructure, real estate, and businesses that form the backbone of the global economy. They say that plays directly into what they're doing. Headwinds of corporate profits put a premium on operating expertise, financing costs, energy costs, wage pressures, taxes, supply chain resiliency, decarbonization. These are the headwinds to corporate profits. They think it all leads directly to what they're doing, and they will be beneficiaries of it. So they plan to compound the value of their current shares, and this is when they were combined, BAM and BN, was 82 to 94 a share. Now it's like in the 30s or the 20s because of the major sell-off. But anyways, they were planning for, and they saw the ability to do a 17% annualized return through 2027 and ending at 175 to 198 a share. Now, the shares have all sold off, and so if they still think this is their target, then that annualized return is actually even better now. This was their investor day. Again, remember, they said they had an excellent 2022. They got $118 billion of inflows. They have $110 billion of deployable capital ready today, so they're in a good, strong position. They acquired American National to dramatically expand the insurance solutions, generated strong operating results, and they're positioning cash flow businesses that are positively disposed to inflation. Hey, and just pointed this out, and Daniel actually called this slide out too in his video, but they've got 100 years of operating experience, right? This is a company that's been through it. They know how to deal with these cycles. And then they just summarized. They said they've delivered 19% annualized returns over the past 20 years. That's incredible. They're positioning themselves to deliver similar returns over the next 20 years. We'll see. I'd be happy with 15% returns. Our existing 3 key businesses and global champions have global scale and should compound at 15% plus, and they generate substantial cash flow, and the excess cash will be invested to enhance returns. Capital recycling should generate further upside. So little bit of background on their business. 20 years ago, they set out to grow free cash flow and compound capital in order to deliver 15% plus total returns to shareholders. And like they talked about, they have actually done 19% versus that annualized 10% from the S&P 500. Okay, and this essentially is how they plan to get to that 17% plus, dividend growth over the next 5 years. So they have a significant free cash flow profile. In 2021, they have $1.742 billion in distributable earnings with a 90% payout ratio, and this is the BAM shares, BAM. Dividends paid to shareholders were $1.568 billion. In 2022, it's $2.1 billion, still that same 90%. So they think they can grow that by 17% per year and get to $4.528 billion in distributable earnings, still pay out 90%, and that would equal basically $4 billion, almost $4.1 billion paid in dividends to shareholders. That's their plan to increase their dividend on BAM by 17% a year over the next 5 years. Stuck with me, right? So I told you I would share my portfolio at the end of the video, just like I do in every video. And here's where we're at. This is just on the day, but Meta is my largest position, so this is largest to smallest position. Meta is the largest position, 24,500. Then you've got Taiwan Semi, Shopify, Snowflake, Rocket Lab, Datadog, GitLab, Tesla, CrowdStrike, Cloudflare, and then Brookfield Asset Management, which was the new purchase, again, right at $5,000. So still going to build this one up a little bit. And then also I've got BN that will also be a 5% position, so that together they equal 10. We've also got Mercado Libre, Bill.com, and Mongo Database. So there you go. There's my newest addition to the portfolio, Brookfield Asset Management. Let me know what you think. Do you own it? Are you thinking about owning it? Am I missing a bear case scenario? Let me know down in the comments. If you want to support me, like the video and subscribe to the channel. That helps other people find us.